Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 11th of February. Now, financial markets have been spending all week building up to a crucial US inflation report, and what we have seen is that inflation spiked much higher than expected again in the States, and once more subsequently we saw yields spiking higher. That spike higher in the yields took 10-year Treasury yields above 2%, and markets have reacted with a degree of fear on the back of that. Equity markets fell sharply, the dollar strengthened, and what we are seeing is that the expectation is now for potentially 6, maybe even 7 rate hikes from the Federal Reserve this year. That's not great news for equity markets, certainly. And subsequently, we are seeing the big reaction through that in Forex majors. We're seeing the dollar strengthening. We're seeing also precious metals falling away. We're also seeing that equity markets are under pressure today. But it'll be interesting to see how long that move lasts, because essentially the dollar isn't strengthening too much, but we'll be seeing at the moment certainly the near-term move in that favour of the dollar strength at the moment. So the markets are also looking out towards the Michigan sentiment data today. That's the prelim number, so there'll be a reaction there later this afternoon. Sterling has been finding a degree of support from the UK growth numbers for December, also coming in better than expected. Now, the charts I'm looking out for today, I'm looking at the reaction obviously to this dollar strength with Aussie falling quite sharply. I'm also looking out for the reaction on gold, which has also fallen away quite strongly. And finally, I'm also looking at the DAX. Equity markets fell sharply on the back of that US inflation number. We'll see if some support can find. So let's have a look. And onto the Infinox MT5 platform, starting off with the Australian dollar. We've seen that the Aussie dollar has fallen away in the hours since that US inflation data, but not before, interestingly, not before what we saw was a spike higher, actually, in the Aussie. This is the half-hour chart. And since then, it has fallen away, but it's a sense that support might be starting to form. But looking on the daily chart, you can see here, essentially, we are in this trading range on the Aussie. Every time it gets towards this sort of resistance around 72.20, 72.40, we can see that resistance comes in, and it's fallen away again from that level, falling back below what is essentially, I suppose, a mid-area point there around 71.20 mark. But you can also see here that the momentum on the daily chart as well is sort of failing around that 50 mark. So it just does really suggest that this is still this negative long-term outlook underneath the downtrend, but failing underneath that point. You can also see a resistance area, I suppose, around the 71.80 mark. So we are still seeing that the Aussie is unable to really find that traction and hold the recovery, but obviously has seen a sharp move lower. On a near-term basis, you've got the 4-hour chart, which there is a degree of support around 71, just above 71 figure there, and if it starts to fall below that, you're looking at 70.50 again, but it's still a very choppy near-term outlook, I'd say, on that Aussie. On the gold chart, I've spoken about gold numerous times, where you see every time it gets towards this 1830 area, 1850, it starts to fall over. You get the RSI failing around the high 50s, low 60s. And again, it's happened once more yesterday, not decisively moving lower. There was obviously this initial if I put it on the hourly chart, you can see the volatility that we saw in the wake of that inflation data. The market did fall over, but it'll be interesting to see now how the market does react again around that 1828 area, because it has ticked higher in the last hour or so. But again, sort of falling over, you'd say that there is an attraction towards the 1800 bucks area, and it's likely to be that maybe the market does pull back towards that. But essentially, that could be then a buying opportunity area on near-term positions, but just unable to once more hold that move above 1830 area. And finally, on the DAX, another chart that is sort of falling over around the mid area of a medium to longer term range. If I move out here, you can see that there is this long-term range between 14.8 and 16.3, and zooming back in, you can see middle of the range essentially now. You've got this resistance area on a near-term basis falling over around 15.6 area, but it's quite negatively configured. You can see that failing around the midpoint of the range and falling over, you can see that resistance is coming in with the RSI around 50. So that's something to take consideration of. And we can see that essentially this is quite a choppy chart. Every time it sort of falls over, it falls quite sharply and then rallies sharply and then falls again. So there is this negative near-term bias on the DAX, and seeing how the market reacts to this near-term tick higher this morning will be interesting. Can it hold that gain? Obviously, the initial support comes in around that 15,280 area. If that support fails, you're looking back around the sort of 15,170, but essentially every time it gets towards 15,000, you find buyers again. But just for now, it's just ticking high this morning, but it needs to hold that support initially. Thanks for watching this video. I hope you found it informative for your trading. I'll be back on Monday. We'll be looking ahead to the new trading week. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Good luck in your trading, everyone.